big escalation, obviously, in geopolitical tension, even at the same time as we're seeing oil prices actually decline in the Asia session.
Yeah, it's a new phase of war, so you've got a escalation of the risks. At the same time, analysts say you've got the war premium starting to fade. Traders reassessing just how oil will be affected, and at this point, there's been no disruption in the supply of oil. If you look at that chart, you'll note the drop in Asia trading, but also the fact we saw NYMEX traded oil here in New York surge almost 3% on Friday as Israel announced that they were stepping up their ground war and that it would be a, quote, long war against Hamas. You saw the same pattern with Brent spiking on Friday and now pulling back on Asia trading. And volatility, again, has really been the biggest risk of this war. We've seen oil all over the map really since the start almost 3 weeks ago. Over the weekend, both Washington and Tehran warned that the conflict could still spread, and that has really been the number one concern, that it spreads beyond the current region and pulls in other countries by proxy. The U.S., perhaps most notably Iran, is of a concern, and so the U.S. sees an elevated risk of the regional spillover, and they say they'll keep response of any attacks on its troops by Iranian proxies, for instance. Iran, meanwhile, has said the war, quote, may force everyone to take action. So that's really what the premium had been. But check out this Bloomberg chart. And there are many saying the direction question is now at issue. And due to a number of factors, including the fading of the war premium, they see oil possibly pulling back. In fact, trading statistics show that the bullish bets by hedge funds on higher oil have fallen to the lowest level in 8 weeks, down about 3%. So you see a lot of those very bullish bets being reined in as well. The one thing that could change that would be any disruption in the Strait of Hormuz. We've talked about how that is a key waterway for shipments of oil through the Mideast, and that in the past, any disruption there, and there was one in July recently, tends to spike oil. Any disruption there, traders say, would be the, quote, worst case scenario.
Meanwhile, we've seen Egypt with their natural gas shipments grounding to a halt from Israel.
Yeah, the cabinet out of Egypt is saying it has fallen to zero the amount of natural gas that they're getting. And that's a big problem for Egypt. They get a lot of their natural gas, if not most of it, from Israel. They then transfer it into LNG, liquefied natural gas, and then export that to Europe. So this is dashing their hopes of resuming those exports. Meanwhile, they believe the halt in the shipments from Israel has a lot to do with one of the first steps that Israel took after the attacks from Gaza, from Hamas on October 7th. They shut down the Tamar oil fields run by Chevron. They wanted to make sure there was no incidents involving those fields. Natural gas now in the spotlight as a result, and all traders continuing to closely watch the latest developments for how it may disrupt shipments. They say that is what's going to really ratchet oil prices higher.